Market Outlook, Calendar Week 29. The review of Calendar Week 28 should not be understood as a calendar of events, but as a condensed picture of developments across economic data, yields, the US dollar, ETF flows, equity market structure, and geopolitical headlines. In the United States, the ISM Services Index for June confirmed continued expansion. The reading stood at 54 points, slightly below the previous month. New orders continued to grow, the prices component remained elevated, and employment returned to expansion territory. The labor market data showed 57,000 additional jobs in June, with the unemployment rate at 4.2%. Yields and the US dollar reacted more strongly to the interest rate path than to any single data point. Equity markets remained concentrated in AI and technology stocks. A recovery in major AI-related names supported the Nasdaq and S&P 500, despite weak market breadth. Valuations and the high capital requirements for chips, data centers, and energy infrastructure moved further into focus. Acute systemic credit stress did not dominate the week, although elevated financing costs remained relevant. ETF flows did not provide a uniform signal. Inflows and outflows alternated, while the aggregated daily flow turned positive again on Friday. Funding for Bitcoin and Ethereum remained neutral to slightly positive, while open interest declined. This is consistent with a partial reduction in leveraged positioning. Market breadth remained limited. Bitcoin led the market, while Ethereum and altcoins reacted more strongly to short-term flows, thinner order books, and project-specific news. Bitcoin dominance stands at around 56.2%. The Crypto Fear and Greed Index is at 26, placing it in the fear category. Capital remains more concentrated in Bitcoin, while altcoin rotations remain selective. Quantum data analytics did not develop or activate any research signals during calendar week 28. The reason was operational. The market regime remained event-driven by macro releases, ETF flows, and geopolitical headlines. Filter adjustments and retraining continued because stable trend or mean reversion structures were not sufficiently confirmed by liquidity, market breadth, and follow-through flow. Activation under those conditions would have increased the risk of regime misclassification. For calendar week 29, the schedule is concentrated on the United States. On Tuesday, consumer prices and core inflation for June will be released. On the same day, the first hearing of the new Federal Reserve Chair, Kevin Warsh, begins before the House of Representatives. On Wednesday, producer prices, the Empire State Index, the Senate hearing, and the Beige Book follow. Thursday combines retail sales, initial jobless claims, and the Philadelphia Fed Index. Friday brings import prices, housing data, industrial production, and the Michigan Consumer Sentiment Survey, including inflation expectations. China remains relevant through trade data, growth signals, and domestic demand. For digital assets, ETF flows and larger token unlocks also require attention. The largest supply event concerns Pump.Fun. Further unlocks affect Connex, dBridge, and Arbitrum. The key factor is the relationship between additional supply and actual order book depth. The geopolitical situation remains an ongoing disruptive factor. Following another attack on a commercial vessel in the Strait of Hormuz region, the United States carried out another strike against Iran. Iran responded with drone and missile attacks against several states in the region associated with the United States. At the same time, talks continued on maritime security. The relevant channels are energy prices, transport costs, traffic through the Strait of Hormuz, and short-term risk premia. Operationally, the main volatility and slippage windows fall on Tuesday and Wednesday around the US inflation releases and the Federal Reserve Chair's testimony. Thursday brings another concentrated window through consumer and labor market data. On Friday, industrial, housing, and sentiment releases overlap. During these periods, spreads can widen, funding can diverge, and liquidations can amplify price moves. Additional risks remain in token unlocks, smaller altcoins, and weekend trading. Research signals remain conditional on confirmed market absorption, stable spreads, transparent volume, and coherent spot and derivatives flow. This report does not constitute investment advice or a recommendation to buy or sell. It is provided solely for informational and research purposes. Quantum data analytics, analytical, strategic, innovative.